Good turnaround Tuesday, everybody. How's everyone doing today? Did everyone in the U.S. observe the curfew? I was out past curfew and they called my mom and she had to pick me up at jail. I was just going out to get a natty pack. Hey, Didier, how are you? And FX Trader. So, turnaround Tuesday. So dollars following through. Wanted to start off with NASDAQ and S&Ps. Check out this divergence. And I know it hasn't meant anything for a long time, but we're almost at the megaphone line on the S&Ps. Check it out. This was the megaphone line. See this formation, the megaphone. We're almost here. So it's really been a weaker dollar that has really helped propel this for a while. And I'm starting to look at the Dixie here. And, you know, we had this big breakdown, right? Broke this triangle, you know, would imply much lower. And, you know, it may happen, but for turnaround Tuesday play, I'd kind of be careful with dollar shorts here. You could see we've been diverging going back to May 20th. So, you know, we're not making new lows in RSI. Didn't hear, and actually, you know, holding above 30. Also, cable outperforming the euro, not by much, but it is. So we'll see what happens there. Really, the key to the S&Ps is going to be if you're a bear, you want to see a turn in the dollar. Something else that I'm noticing here is for the first time in a long time, you know, metals are up. When's the last time you saw gold up a couple bucks? And silver down 4 cents. Okay. So I pointed out you know, we were at more than equality on the gold silver ratio down here. And, you know, it's not doing anything spectacular yet, but this is the first time. And, you know, many trading days I've seen silver. Normally it'd be gold down a few bucks and silver up 10 cents, right? And that shift is beginning to happen. You know, I wouldn't be looking for a ton of stuff. Oh, I've been bearish a dollar. Still long some euro, but tempted to get out. So with silver doing this, I would say the S&Ps for a scalp, and I'm not looking for a home run ball. If silver comes off, I'd go with the 2-day off number, which comes in at 1785. That would still be a nice scalp if we sold it off. Yeah, VIX really isn't doing that bad because we've made successive new highs in the S&P without making new lows in VIX. See here and here. I think you could accumulate VIX and maybe have a stop in your head of getting out if we start closing under 24 because you have that moving average there. Weekly, it's much lower. It's down here around 20. I don't think we're going to fill this gap, this breakaway gap. So, you know, really, I think the VIX is a shot for accumulation. Really hasn't done bad and, you know, it's been sideways for a month, so I'm not sure. Sometimes, let me ask you this, sometimes we think something's doing bad because it just hasn't turned yet and it's moving sideways. Doing bad, I would say, would be, you know, straight lining down here. That would be bad. I know it feels bad if, say, you're long VIX and you've had a couple of good sell-offs in the market and it hasn't done anything yet. But I don't call this action bad over the last month with what the market's done. So, this is 4 weeks, right? 1, 2, 3, 4. And then you go to the S&P and the last 4 weeks, at least the last 3, 1, 2, 3, screaming, right? So maybe the VIX is telling us something that, that we're pretty close to a correction happening. And when you look at the S&P and you look at silver, pretty similar looking charts, different asset class, right? One's a commodity, one's an equity index, but similar pattern. Okay, so you really have binary markets quite a bit. It's like, all the air came out of the balloon and the Fed blew oxygen back into it with their actions. And different markets they're all kind of going together, up together, down together. The only difference is magnitude. So I'm also still attempting shorts here in gold as well. I need a Friday close under 1734. And, this still could be a failing rally from this $70 decline. We're about 61.8 back here. Need it to start doing something wrong under, say, 25. 1720 has been a pretty good pivot. So short both gold and silver today. Hiya, DJ. So who's going to sign up for the best FX website on the net? See what's going on. Not a lot of active patterns in play. But look, Greg came on, and I remember him saying last week he liked cable better than euro, right? So he walks his talk. So long from half size position, 22.5, has a couple hundred pips on that. I don't know what to do with the Aussie. I can't short it and I can't buy it. So, he came here. Did anyone take the long cable call from Greg last week? Okay, great call. All right. I'm going to let Blake cover euro, and Blake's up next. You covered it. You took it, Dan Spear? Are you a subscriber yet? You remind me of Mr. Green Jeans and the Dancing Bear on Captain Kangaroo. The Dancing Bear. I know, I'm pretty old. All right. Well, if you haven't, the way to say thank you for us giving you some good ideas for you to capitalize on is just peel off some of those profits and become part of our community. Just a suggestion. Good morning, Blake. Were your family in the house for curfew, or did you venture out into the backyard last night?
Hey, good morning, Coach.
Hey, buddy.
How you doing?
I'm doing okay. So euro continues to push.
It does. Yep.
Are you skeptical?
Just because the ECB is on Thursday, so I think you have to be a little bit, a little
careful
bit more
anyway. Careful anyway.
Yeah, exactly.
Okay.
So, I think you got to be a little bit more cautious because of that with the ECB, but the euro continues to be really strong. The one thing that I'm a little worried about is, we're at the 618 trading in the euro dollar, so that's like the bigger concern that I have regarding the euro right now. Just coming up to the ECB. I know we're breaking out, but I think we have to be a little bit careful around these levels. So we're at the 618. I think if we stay above the 111.50, that's great. It's pretty bullish, but we have to be just a little bit more careful here. I'd rather, as I said before, I'd rather be a buyer on dips if we can get them. But the question is, are we even going to be able to get dips in the market now? So, and right now the FX market's pretty. I want to say it's really disconnected with equities for the most part. You're just seeing, dollar weakness, stocks being up too. But even when stocks come down, we're not seeing dollar strength. So, like if you look at the S&P from this morning, and you look at the S&P's been dropping for like the last couple hours. The euro dollar. I mean, I guess it is, but it's still there's still a lot of demand to buy euros even down at these levels. So, that's what we're currently seeing. That's what we're currently seeing now. Now the cable is also, pretty strong as well, and the cable's holding up. Cable's holding up well, and the Aussie and the Kiwi, these pairs are extremely strong. You look at the Aussie. Holy cow. I mean, we broke above the 200-day moving average. We're testing the 88% retracement. And I don't know if there's going to be a lot to stop the Aussie strength at this point. The Aussie continues to just blast higher. And you're seeing it not just in the Aussie, you're seeing it in the Kiwi that's at, testing the 200-day moving average as well. You got the dollar Canadian that is trying to fill this gap. Trying to fill this. Hold on one second. Trying to fill this gap down here at the 134 level, and that's looks like where we're going with the dollar Canadian. Even though we're at the 78% retracement of this entire move, it still looks like the dollar Canadian's got further to go. So when you look at these commodity currencies, you probably, like me, I'm scratching my head going, oh my God, like nonstop. But do they have further to go? Can they go further? I think the answer to that question at this moment in time is yes, they probably can go further. What do? You either have to, wait for a pullback if you can, or stand aside. And, even with equities moving higher this morning, the dollar yen finally broke above 108. I mean, the dollar yen has been kind of capped around the 108 level. Now, that we're right up against the 200-day moving average. We're coming right up into there. So that 200-day moving average around the 108.20 level, 108.20, 108.25 level is going to probably come into play. And whether that stops the yen or not, it'll be interesting because the yen really hasn't moved a whole lot as of late. So Dale, you were just talking about gold. Now, what were your thoughts on precious metals here?
Well, the key takeaway for me today is silver not demonstrating relative strength over gold. I think that gold-silver ratio has run its course for a while, and it's been many days since I've seen gold up and silver down. So I think that it might be vulnerable for maybe like a 50-cent pullback or so from here to start.
Okay, so you're looking at the possibility of getting a little bit of a pullback. Like I look at silver, and silver's pennant formation still points to 19, but we're not going to do that in one fell swoop either.
Yeah. So I'm just saying it's the first. I started noticing that yesterday, and I'm thinking that there might be some unwinding of that spread. Kind of like EG. If they unwind it, the thing that's been lagging will get pumped up, and the leader will have some pressure on it if they're unwinding the spread. So just, an observation. And and gold, I still think we need, I still am negative gold unless we start closing over 78.6 back over, and that's 1750-ish. So we'll see. And I have a hard time wanting to press the short side of the dollar here too when I see it. diverging, and euro is too. And euro's not leading the way. You know, I mean, euro pound. You made a great call. Said it was done Friday. And, you know, I think most dollar bear markets should be led by euro strength, not cable strength.
Yeah, yeah. Oops,
You know,
dollar yen.
just some old timer stuff, you know.
Well, that's one
Old
of the
school.
benefits of having you here, Dale, is really, letting your experience, speak, and which is, um, second to none. So it's great having your input here. So yeah, the gold market, it's like I sit here and I look at gold and I'm like, as long as we're above this level right here,
Yeah.
we gotta hold on real quick. Bear with me 1 second.
Okay, like 1720.
What's that?
1720, as long as we're above that red line.
Yeah, as long as we're above that red line, I mean,
Yeah.
it continues to be bullish here.
Yeah.
Wow,
I could see that too. We could get a third drive up there at new highs at 1780 or so. You know, everything for me, Blake, and I know it is for you too, is everything's kind of a shot. I mean, there's high probabilities, but you have to probe the market to be there. So you probe it, but you protect it, right?
Yeah.
So
right.
I'm just probing it.
Yeah, I mean, you kind of gotta take your shots, where you see them, and the thing is, um, this market, like you look at like here, I'm going to show you just the Aussie yen. The Aussie yen has just broken this downtrend line resistance, pretty big resistance here. And this is on a daily chart. New Zealand yen is just testing the 200-day moving average right now. Okay. You've got the euro yen. I mean, blasting higher. We're about ready to break this resistance. And so when you got these yen pairs like the Aussie yen, the New Zealand yen that are rallying the way that they're rallying, yeah, it is. It's risk on. B, it should usher in some dollar weakness. So, that's what I'm kind of thinking, is that we're going to see some dollar, or did I say dollar weakness? I meant, but dollar weakness too. I would think that we'd see some gold weakness too, with the yen as weak as it is right now. But we continue to see gold be very strong, and it's kind of, I guess it's not so crazy if you think about the world that we live in right now, but you would think that gold would come off a little bit, and it hasn't. So anyway, what else are you looking at today there, Dale?
S&Ps are almost at that megaphone line up there, and probe and protect. It looks like we could be heading. I've seen guys talking 3,200 now, but look at on some shorter term time frames. Go to your 4, your 2, your 1, and we're not confirming up here. I guess you could wait for it to do something wrong first, but again, I can't be long up here, and I want to be short. I didn't do anything there. Actually, when you look at this S&P chart that you're showing and some of the other silver chart that you're showing, gold actually is a laggard, because all of these are making new highs over the last several days where gold hasn't. So, that's another kind of, I'm thinking, a market tell. If you just put up silver, S&Ps, and then gold looks like it has the weakest structure of all of them.
Yeah, it does, but you would think, looking at gold and looking at that. Well, now let me ask you a quick question regarding, you say the weakest structure.
Yeah.
Are you saying the weakest structure because it's consolidating its gains and it's not? Okay.
Yeah, and that, silver's making new highs, S&Ps are making new highs, dollar's making new lows, and gold hasn't taken out the 1767 yet. That's
yeah. All. Okay. Well, I guess regarding gold, then because it's consolidating and it's not following through to the upside, you think that the risk now is tilted towards more downside?
DSI 85, 90. The commercial setup isn't so bullish for gold either.
Yeah. Okay. All right. That makes sense. I mean, and I know the market's pretty long gold, and I know the daily sentiment index is strong. But in this environment, though, I got
Yeah,
to
it could
ask.
keep going. Yeah.
Could,
Well,
yeah.
I have stops in. I mean, I'm getting out above. I'm not even going to wait for a new high, because if we're heading up there, we're probably going 1780. So I have a 1755 stop in.
Yeah.
It takes me out. It takes me out. Won't be the first time I lost, $15 in gold.
Right. Okay.
But if
All right.
it fails from here and we start taking out last week's low, you could be talking about 1640, 1550, something like that.
Okay. All right. Very good. So,
like always, Blake, right? Time will tell.
right. Yes. Time will tell. Time will tell. That's for sure.
Yeah.
And I'm sitting here looking at what I should do with some of these other dollar pairs, and Benedict in our chat room, he was talking about this Canadian, and I think the Canadian's getting interesting down here as we approach this 200-day moving average and this gap fill in March. Remember, this is the gap fill that we saw when there were the big reversals or the scare with all the COVID deaths, and as we were going through the COVID-19 situation, the dollar Canadian really started to gap up as shutdowns happen, and you can see that the dollar Canadian looks like we're almost back to levels that might be more attractive for longs. I'm looking at this as maybe a channel bottom down here too. So, if the dollar Canadian gets down to 134, I think it becomes more of an attractive opportunity down here. So, I was kind of keeping my eye on that as well. There's one other pair that I'd like to talk about before I bring in Stelios and Steve. And Stelios has been a Norwegian krone bull, and rightfully so. The US dollar Norwegian krona has come down pretty good, but now we are around the breakout point, which comes in at 947 roughly. You can see this is a big channel that we were following. Let me go ahead and grab it. Big channel that we were following, right? And we broke out of that channel, and we're coming back and we're retesting the channel breakout point, if you will. So I think this is pretty big support for the US dollar Norwegian krona. I don't have a long yet, but it's something that I am keeping an eye on, especially if the dollar starts to find its footing. And Greg I meant Gator, Mike in our chat room. Michael, he's been in our chat rooms for many years. He was noting that the dollar index is at a 38% retracement, which it is longer term, and we're also at a 618 of this move. Well, slightly below it, but pretty important supports here. And so, if the dollar index finds some support here, there are some opportunities, I think, lingering around, whether it's the US dollar Norwegian krona, maybe the US dollar Canadian. I don't know if, it's like you look at the Aussie, you're like, well, it's probably a good short up here somewhere, but are you willing to stand in front of this right now? And then here's the Kiwi as well. It's like, okay, well, we're at the 200-day moving average. Maybe this is the better short up here. But there are, we're starting to get some pretty attractive levels if you want to buy, some dollars around here, at least against some other currencies. And I think that's things that we have to take note of, especially with some of these commodity currencies. So with that being said, I'm going to bring in Stelios and Steve. Good morning, guys.
Good morning.
Good morning.
Hey, Stel, you've been very bullish the Norwegian krona, so and rightfully so. But here we are. So
Yes.
what do you think about it now?
a good question. I actually wrote, I've been riding a short Euro Norway position and a much smaller short dollar Norway position. I wrote on the chat room, it was a couple of days ago, I think it was Friday, I closed out the dollar Norway because, like you said, I think we're getting close to a point where there will be support. And I've also taken just over half a position off of the Euro Norway, which has done really well. And my problem is that I still think we will see another leg lower in equities. Call me crazy, but I think it's coming. And if that happens, then oil is going to turn lower. All commodity currencies is going to turn lower. So in these crazy times, I think it's very good to actually take some profits. And if it continues, if dollar Norway and Euro Norway can continue to crash lower, well, okay, I'm going to make some more, but with a smaller size. So so be it.
That makes sense. That makes sense. Well, it's been a great call. So congratulations on your call. And what else do you see happening this morning? I mean, these commodity currencies continue to be really strong, and stocks continue to be really strong as well.
Yep, it's the same. It's stocks up, dollar down, commodity currencies up. It's it's been like this and the opposite, obviously, over the past weeks. Maybe not every single day, but the correlation is still there, and I think it will continue. And so the main question we have to ask ourselves is, how much further do we think equities can go? And for me, they look at extremely stretched levels, but so does it seems the same to pretty much everybody. So the pain trade is probably going to be a little bit higher, unfortunately, I think.
Right, yeah. I mean, it seems extreme, but it could be more extreme, right?
Absolutely, it can be extremer, like you could say.
Those
Yeah,
rubber
right.
bands, you never know how far they could stretch. Rubber band till they snap. So nice trade still.
Yeah, very good. And I think, if I'm not mistaken, Steve is not here today. Is that correct? He had a doctor's appointment for his...
I am here.
Oh, you are?
Damn,
okay.
he's
How
here.
are you?
Good.
Hey. So Steve, how are things going with you, and what are you seeing out here that's got your attention?
I think actually more or less you covered, the general outlook. Pain trade is still higher in risk. I think that the risk reward is not there anymore, quite the opposite. But, I think that perhaps even more of the bears have to first capitulate before the index can freely move lower. Now, obviously, market doesn't seem to respond to anything that, under normal circumstances it should respond to. 2020 has been a horrific year in every aspect we can consider, and still the S&P, for example, is 12% higher than last year. So if somebody just looked at the stock indices, they would think that 2020 is an okay year, at the very least an okay year, if not a good one. And the opposite is true. Now, we know that with all this manipulation, everything has become one trade. We said it since weeks ago, meaning anything that's dollar denominated is responding more or less to risk than anything else. So I do think we might see a little bit more weakness in the dollar and a little bit more strength in indices before we probably see a sharp move lower. I have no idea what the catalyst that the market will consider caring about will be. Might be something stupid in comparison to what it has not been responding yet, or might be something important and relevant, but at the end of the day, it doesn't really matter. The big question and the important question, in my opinion, is going to be what kind of a move lower are we going to get, and is this going to be a move we should be buying? And I think we need to be more patient and determine that based on the type of move we see unfolding to the downside when this happens. I don't think it's going to take more than a few days, a few weeks, worst case scenario. I think we're going to see something like that happening within the month of June, since it's just the beginning.
Yeah, and the whole concept of, like, you use the old adage, sell in May, go away. it doesn't, it's not like a May 1st, May 31st. It's like, you know, if you look longer term, you know, if you would have sold in May, yeah, things may have gone a little higher, but, you know, by the fall, you're probably happy that you did so. And this case, this might be the same type of situation. You know, if you would have sold sometime around the 3,000 level, you know, in a month or two or three, you know, we might be trading back down at 2,800. But where the turn comes from, I mean, you know, we don't know. And what you're saying here, and I agree with you, is maybe we could even go a little bit higher before actually reversing. So
Yeah,
as,
Guys,
all about.
If you remember, we were talking about how extended markets were in late last year, and we're saying, you know, I remember saying this with Steve. I don't know what the catalyst is going to be. Something's going to happen.
I specifically remember, Stelio, that during the first webinars of the year, what I said is that, listen, I know one thing for sure, is that if you sell at current levels, you will be able to cash it out rather soon within the year for a good profit. Now, you know, I didn't assume that we're going to have that big of a move, you know, that came with COVID. But the question is, that was an easy prediction. The question is, how many have the capacity and the mental stamina to, because let's be honest, even if you did what I said, that that was not an advice, by the way, I just said, you know, what I think would happen. But if you did it, imagine how long it took you and how much you would be sweating bullets as long as that move higher was still unfolding before we found a high at the 20th of February, right? So
yeah.
it would have been almost two really bad months for somebody's account before they could actually, you know, book, you know, good profits. Now, I think the same deal happens here. I mean, if somehow you could sell and close your eyes, and you know, you would end up being able to cash out, you know, at a profit. But you know, it's all about also risk reward. So it's not that somebody can trade like that. In any case, I think that what I would ideally love to see would be a divergence between the Nasdaq producing a higher high and the S&P not, which is a very likely scenario in my opinion, because the Nasdaq is now like a breath away from all-time highs, while the S&P is still some distance away from it. So I would really love to see a divergence like that.
Well, I'm going to let you take over the charts, and I want to thank everybody for stopping and listening to me. But don't leave, because you got Stelios and Steve that are here to take over for you. And remember, if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. So Steve, Stelios, Coach, pass that over to you.
Thank you, Blake.
Thanks,
and
guys.
also, if for some reason you're not getting compensated for the trading you do, you know, you should really
Good luck today, Blake.
You should really visit our reimbursement program through Forest Park FX. These guys are great. They're going to help you find the best brokerage firm for your trading style, or you might even stay at the same one you are if that's a good actually choice. But the most important thing is that you can either get reimbursed through your ForexAnalytix subscription or get cashback rebates by doing nothing more than you're doing by trading, you know, as frequently as you're trading.
Yep.
So it's literally a win-win. I mean, there is absolutely no downside.
Yep. Well, I want to say, just add one more thing. We're speaking about equities. I was talking about this in the chat room again this morning. I think what the market and people in general are realizing is that, it kind of makes sense, is that, you know, if you look 5-10 years from now, equity markets, pretty much all major indices are going to be at all-time highs or will have made all-time highs. So I think people maybe are thinking, look, this is going to go, it will have inflation everywhere. And I don't mean CPI inflation, the way they measure it. I'm talking about asset price inflation. So people are realizing, look, any dip we get, we really must be buying, because in the long run, everything's going a lot higher. So, you know, maybe is this an opportunity that people were looking for? You know, this dip from 3,200, whatever S&P was, to 2,300, it could be. You know, we could get a big dip like we did in the global financial crisis, but in the long run, I think we all know things are going a lot higher. So maybe this is people trying to jump the gun and just say, right, that's it. I'm invested. See you in 10 years. I don't know. I'm just thinking out loud here, but you know, it could be. Some people might think like that. Anyway, enough about stocks. Clearly, we need more rioting and more COVID and more everything because we're going to go to all-time highs pretty soon.
Absolutely.
For
and
stocks.
debt and deficits don't really matter. I mean, people that
course.
believed so for hundreds of years were really stupid because,
no,
you know,
nothing matters.
they didn't understand, you know, very basic stuff like, you know, you can have as much debt as you want and it's okay, and, you know, things like that.
Yeah.
So yeah, I mean, you know, at some point, you know, people are gonna wake up to reality as it has happened. I think, Stelio, without exception, every single time in the past that explicitly or implicitly there was the assumption that this time is different, you know, every single time, you know, gravity ended up working even, you know, with a delay, and people realized how dangerous of a, you know, proposition that is. I don't think this is going to be the exception.
Yeah, I agree. Anyway, what else is there to say? Clearly, the developments in the US are not good. President Trump is, I don't know if you talked about this in the beginning of the webinar, I was away, but you know, there's been a curfew imposed in major cities, and you know, the president is trying to take some control, and he's threatened to use the military if states don't take care of their own affairs. So let's see how that goes. Definitely not pretty scenes to see on video, but unfortunately, it's all happening. What else to talk about? Chancellor Merkel of Germany, I think they're going to be talking with their coalition partners about another package to help Germany. So more stimulus. Surprise, surprise, and the packages just keep coming from every major government. So
although to be honest and to be fair, you know, as we've said in the past, Germany is one of the few countries that, being fiscally prudent for many, many, many years, they do have the capacity to fiscally stimulate without derailing the balance sheet, right? But that is the result of running mostly surpluses and balanced budgets with very, very few exceptions for so many years.
Yes, indeed.
And that is even Keynesian theory, because, you know, a lot of people are trying to claim that, you know, what they propose and what is happening at the moment is the Keynesian solution, which isn't. Because even Keynes, you know, his viewpoint of, you know, how you should stimulate an economy was that during good times, you should be running surpluses. So during bad times, you can actually stimulate by running deficits. It wasn't like during good times you should be running big deficits, so during bad times you can be running huge deficits.
yeah. Well, we've talked about this many times in the past, and I frankly don't see how many of these countries are going to get out of this spiral. It just seems impossible. But anyway, remains to be seen. What else? We had the RBA interest rate decision. They kept rates unchanged as expected, and they gave nothing new. So
the Aussie seemed to like it one way or another.
Well, the Aussie overnight didn't do much, but then the dollar started dropping. So Aussie dollar is rising, and commodity currencies are rising. I don't think
they're doing well.
I don't think it's a function of what the RBA did, but they were not dovish. You know, that's
but definitely not being, you know, not being explicitly dovish these days has ended up being considered being hawkish. It's the new hawkish. Not being, you know, excessively dovish is like, you know, the closest thing you can find to a hawk.
Yeah, absolutely. So we had that. We had some housing data out of the UK. Nothing really major. House prices are still rising. Less than expected, 1.8% year on year, but you know, it's still not not a disaster by any means.
Oh, yeah,
And
absolutely.
some PMIs out of Switzerland, Norway, nothing out of the ordinary really. It's been pretty quiet in terms of data today. We have a few interesting things tomorrow, and the non-farm payrolls obviously on Friday, and we have the Canadian interest rate decision tomorrow. But that's not much is expected. But that's
USD CAD, by the way, Stelio, is one of the pairs that is actually quite interesting. Blake already mentioned. I actually haven't taken any profits yet on my USD NOK and Euro NOK shorts, and that's mainly because it was, I started building a position by 1/3 of each. So, it's not that I have like a full position to get out of. I'm like more than 10% in the money in USD NOK. I'm like 11% in the money, but
awesome.
it's 1/3 of a position. So it's not like, that kind of a home run. So I'm still considering of keeping it and building a bigger position. But yeah, I do agree we might see a rebound from here. I mean, this 948 area is an important support area, and equivalently USD CAD, we said that there were two scenarios here. One of them was that this was a big triangle and we would directly break higher. The second scenario was that the triangle was the one we find after the first dump lower, in which case we should see one more move to the downside. And if you remember, when that happened, I said that, listen, at the very least we should be seeing 136 sprint, but I could also see the case for a move towards like 138, which when I said it was the confluence of this support area and the 200 daily moving average. Now the 200 daily moving average has moved a little bit higher. But in any case, I think that now, as we see USD NOK having reached support, I think that USD CAD is also very close to support. So I do believe that the risk-reward ratio is now slowly shifting to the upside, and the exact same thing, but opposite direction, because the US dollar in this pairs is the second component, is the funding currency, applies to the Aussie USD and the Kiwi. I mean, they've run, they've already had some nice moves. And nobody says that they can't move higher. But, in my opinion, especially given where stock indices are and, that the relationship has become again extremely tight, I think that it makes no sense trying to buy them here. I would totally understand if somebody wants to be to the long side, if somebody wants to be long these pairs. But I think in order for this to make any sense and have any reasonable risk reward in hand, we would need to see a pullback. In the case of the Aussie, at the very least, I would want to see a retest of this triangle at 65, 60. If not even lower, like levels like 60 to 50. In any case, we first need to see a reversal lower, and then, depends on how it starts unfolding in technical terms, we can start discussing potential downside targets and start deciphering, what type of price action we get, so we can start making plans of, if we want to actually buy them, which areas would be interesting in buying them, so on and so forth. One interesting pair in my mind is the pound, because the pound, clearly the head and shoulders formation target failed since we, crossed through the neckline. I said that was a possibility, and now we're testing a key resistance area. So you can see that alternatively, this is like a corrective channel. So, if we move higher from here, and especially if we break through the previous double top up there at 126.50, there can be, a decent upside following from there. Clearly, the pound has been doing somewhat better than the euro. The euro is still has still not been able to close above 111.50 on a daily closing basis. So, I want to first see a move above that, a sustained move, meaning, at least we should close it, on a daily above it, in which case I'm going to be looking towards 113 as the next upside area. The euro pound also clearly shows, here it is, clearly shows this overperformance that we had during the past couple of days, from the side of the cable against the euro. Nice rejection from that resistance area. We back tested earlier today this breakout area at 88.50. Listen, as long as we stay above 88.50, this can just be a consolidation and we might see more upside. But if we break through 88.50 once again, I think there's going to be a good argument that whatever rebound this was from these lows, it's over. And we might even see lower levels, in which case we should expect more of a cable over performance. So 0.8850 key area for euro pound, and probably a good gauge in which of the two pairs we should prefer against the dollar in the time ahead. Now, Blake already mentioned that it's a good idea if I go to a 4-hour chart for that, actually. Blake already mentioned that USD yen is breaking higher. Here it is. You can see it. You can clearly see it here. Listen, you know very well that I'm not enthusiastic at all about USD yen. I mean, it's a really pain to trade. It's been doing nothing but, producing choppy price action in both directions, but in essence going anywhere. But admittedly, this move above like 108 at short-term time frames should be considered, a bullish move. Now, as I said, don't bet too much on it because we've seen how this unfolds. I was expecting that might actually happen even when we were back there. Now, I didn't expect that it's going to take so long. But even if this is a temporary move to the upside, I don't really see any big resistance until we find like 109, 109.10, in which case I think that there can be more upside. There can be more upside in yen pairs in general. And the reason I wanted to say that is because, for example, look at euro yen. Euro yen broke through this key area of resistance 119.60 today. That's a big development. Now, we've already seen a big move from 114.40 to 121, so clearly buying here makes little sense. But now that we've broken above this key area of resistance, I think that it can easily act as support from this point on, meaning whenever we see a pullback to that area, I think this is probably going to be a good buying opportunity, right, for something like that. So euro yen, now, it has convinced me more of its intentions here, and pound yen is making the move today. So, we had this corrective move lower. I mean, the characteristics were clearly corrective, right? Compare the move higher with this move lower. I mean, we retraced roughly 50% of that move higher. That move higher took something like 10 trading days, and it took like a month or whatever to just, retrace 50% of it. And today we're breaking above this area, and I think that can easily extend towards 140.50, 141. So pound yen breaking out, euro yen breaking out, Aussie yen has already broken out. Here it is. Kiwi yen, same deal. So perhaps we have different formations here. So something like this. So bottom line, be careful being on the short side of this yen pairs. I think it's better, especially for some of them like the euro yen and the pound yen, if you buy a retest of the breakout areas. Let me go through some of your questions. Oh, having to do with stock indices, nothing has changed since yesterday. So, as we said, the path of least resistance in the short term might be to the upside. I clearly believe that momentum is waning here. I think we might see an extension towards like the 78.6 in the S&P, but I still expect a failure. But if you don't want to participate in trying to fade this move to the upside, there is a trade perhaps here that doesn't need you to be bullish or bearish stocks. that looks very, very interesting from a technical perspective, and indirectly I mentioned it before. I mentioned it yesterday as well. So if you look at the Nasdaq and the overperformance of the Nasdaq for quite some time, now that the economy is reopening, I think that we might see this move reverse somewhat. So I was looking at the ratio of the Nasdaq over the S&P. And you'll notice two things here. First of all, just look at this unbelievable uptrend in the ratio of S&P to Nasdaq. Let me tell you here that in 2002, following the crash of the Nasdaq after the Nasdaq bubble deflated, imploded actually, they were roughly trading at 1-to-1. Okay, and now we're at roughly 3. And look at this. This was the Nasdaq bubble high in this ratio, found March 2000, and we're very, very close to revisiting that high. Now, there is not a single market participant that doesn't accept that the Nasdaq valuations during 2000s, at the beginning of 2000, end of 99, beginning of 2000, was a bubble. I mean, it's widely accepted as one of the textbook bubbles we've had in financial history. So we are very close to that, and not only we're very close to that, but also notice in this ratio the formation we're building here. First of all, you can clearly see the more than obvious RSI divergence. I mean, the previous RSI high back here in March was with the RSI being at 86, 87, and the current high is below 70. Second of all, just look at this potential formation. This is an ascending wedge. So Dale would likely be looking for another high, I'm assuming, which is a likely scenario, right?
Stop being a mind reader. No, Sir Volgi.
Yeah, but to be fair and honest, it's not absolutely necessary that it's going to happen. So
yeah, I've seen 2 drives be enough.
Yeah, exactly.
Where
Especially
I've been waiting for a third, and
especially when the RSI divergence is so huge, right? Because this is a huge RSI divergence. I mean, from 86 to like 70, 67, whatever.
Yeah.
So I think this is quite an interesting trade, actually, and a trade that doesn't need you to be bullish or bearish stock indices. You just want to take a relative position for a specific overperformance or underperformance. It reminds me a little bit of the great offer that the gold-silver ratio produced.
Yeah.
By giving us that historic all-time high, and especially given the history of these metals, which is like 5,000 years of history, that was amazing. Now we have, somewhat a comparative opportunity here, given the fact that we know that 2000 was Nasdaq being valued for, rainbows and unicorns. We know that both indices are priced like that, but imagine, besides both indices being extremely overvalued at the moment, still the Nasdaq has managed to reclaim its bubble high, almost reclaim its bubble high against the S&P. So I think this is quite an interesting trade up here, by the way. Now, I haven't looked into it, so one thing you might want to look at, because you might even get lucky and get paid for that, is which of the 2 indices has highest dividends. So I don't know if you want to be short one and long the other one to play the spread, if actually you're going to have to pay a little bit or you're going to get paid, that depends on the dividends for each of the indices. But that's the only thing that somebody would need to have a look at. I mean, imagine if the S&P actually pays even higher dividends. I mean, you're even going to get paid to be in that trade. So I think this is quite an interesting trade. Now let me go through your questions. Dollar shorts are paying daily. Why you avoid them? Euro going 114, 115. 113 is the next upside resistance, but yeah, it's very likely. I would be, the only reason I would be skeptical, because I do think that the dollar is going to lose huge part of its value in the years ahead, is because I expect shortly some risk off to come, and we know that risk off will come with some dollar strength. So I would feel much more comfortable being short the dollar against mostly everything after I see a risk off move play out, and risk going back to on. I think that would be probably the best opportunity to be short the dollar, and probably not for a short period of time, probably for a long period of time. Coach, your thoughts on Aussie? Okay, I already covered those. I'm not sure if Dale covered them because I was on the phone at the beginning.
IDK.
Meaning?
I don't know.
Ah, okay.
I can't
Okay.
buy it. I can't sell it. I don't know.
What is the Nikkei in correlation with? Depends on the Glenn. The Nikkei it used to be very tightly correlated to the USD yen. That has broken down somewhat. It's now mostly moving along with the rest of the risk indices. More correlated to some, less to others. Think S&P can see as high as 32, 32.20. It can. I doubt it. I mean, I think it's going to go higher than that, but not before a deep correction. Okay. So I think we're going to see a correction unfolding before we probably make it to 3200, 3220. Not that it's impossible, but my assumption is that it won't. Why risk off comes with dollar strength? Any reasonable arguments? Of course, because risk off sends people cashing out to their investments, and cashing out in the vast majority of the cases is buying dollars. So when you want to go back to cash, not usually, but in most cases, that means going back to the dollar. So risk off environment gets people to want to cash out through risky investments, and by cashing out, meaning they have to convert whatever investment they have back to US dollars. That is the main, not the only, but that is the main reason why you see usually this risk of move coming with associated with dollar strength. Question about the TLT. Listen, the bonds, the US bonds in general, and it's not very different if we have a look at the 10-year, the 20-year, or the 30-year. Just look at this. I mean, this is 100% manipulated, right? Just look at this. I mean, we've been in a coiling range that has been decreased to almost nothing since March. I mean, look at how volatile everything else has been since then, and look at the 10-year bond, in essence, having been pegged to this 139 roughly level. I mean, this is not a normal move. Here's the 30-year. And if you see the TLT, which is in between, it's more or less the same. Now, in general, I think that all of those will probably do something like this. So I think that when we see the next risk of move within the next few days, few weeks, we're going to see another move higher from the bonds. So yields moving lower once again. But I think that following that next move higher in bonds or lower in yields, I think there is a very good chance that we're going to see a big move to the opposite direction. Okay, so I wouldn't be fading bonds and bond strength yet, but I will be actively looking to do so if we're talking about US bonds, following the next move to the upside. That's, that's my best assumption on what's going to happen here. Okay, and as I told you, it doesn't really matter if you have a look at the 10-year, the 20-year, or the 30-year, because the formations are quite equivalent. Not exactly, the same, but, very, very similar. If I can cover Bitcoin, not only I can cover Bitcoin, but I would actually cover Bitcoin because it has produced quite an interesting technical development. First of all, it broke through this triangle. You can see it here. I mean, this was a textbook symmetrical triangle. Second of all, look at the trend line it's currently testing, right? And previous high. Now, ideally, Mr. Market would probably want to break through the previous high, then produce a move lower to send to the woodset all the weak long hands, and then perhaps move higher once again. So something like that is what I would envision could happen here. But Bitcoin is toying around with the idea of producing quite a bullish breakout, and this has to be said. As long as we trade above like 8.6 thousand, I think that it looks rather bullish. And here is Ethereum, and I'm going to close with that. Unless we don't have an interview, Dale, I don't know. Do we?
We do. Raksha's here.
Oh, we have Raksha. Okay, nice. Okay, Ethereum, not looking as bullish as Bitcoin, but that might even be an argument for, doing some catch up. Okay. So that's what I think about it. Anyhow, I know we have more questions, but you know how it is. I mean, this is a free webinar. It has a specific amount of time, and there are so many questions we can answer every day, right? If you are members of ForexAnalytix, you have the ability to ask questions all day long in the chat room and see our analysis all day long for 30 different instruments. In the chat room, of course, we talk about, discuss, and analyze, everything. I mean, there is no limit to what kind of market we can cover or discuss. So thank you, Coach.
All right, buddy.
Enjoy the interview.
Okay, Raksha, welcome back.
Hey, hi Dale. How are you?
Oh,
You?
how are you, my trading warrior sister?
I'm absolutely fine. How are you? How are you doing?
Good. I'm looking forward to seeing what's on your radar. We haven't talked in a while, and God, there's been so much happening in the markets and the world. I'm wondering what you're seeing here, because you have a great eye, and that's why I keep inviting you back. I love your technical work. So
Thank you so much for that. First of all, I hope you guys are safe and in this time here in the COVID and everything is going on right now. And thank you so much for inviting me here, Dale. There are so many things going on in the market right now. So much of dramatic things here with how the prices are just going down and up and all. So many things here on the radar here. But most important part is just being very cautious about what to do, what to trade, what not to trade, and especially not taking the long-term calls for sure. Because every day, especially in Indian market in Nifty, every day there is either a gap up, just like of 200, 300 points. Then suddenly there's a gap down. It's like a tug of war going on between the bull and bear here. So just keeping it safe so far. The very interesting part
has that caused you to shorten up your time frames for becoming more of a take it when you have it type of trader than trying to sit with positions?
Yes, of course. It has actually changed the way we used to trade. We used to trade on a very longer time frame. Like earlier, also, like I have shared that the crude oil, the prices that going to touch 70s, and that trade was around almost was for around two to 3 weeks, more than that. So
Yeah.
now the time frame has definitely has shrinked, not going more than more than a week,
Okay.
especially, and mostly I'm going intraday only, just doing the quick scalps in between those lines, just
Okay.
1 or 2 days, that's it.
So
So
we're
that is,
looking at the dollar monthly. What's it? And I see a
I'll
huge
just
objective to the
hide
upside.
I'll just hide this for a clear view here. Yeah.
Okay.
So I was just looking at how the DXY was since since this initiation, like in the 1986 and before, what kind of move it was giving, how it is looking on a bird's eye view, and it's so interesting. If you can see this, it's a kind of a harmonic move which is going on right now. I just touched it, and almost going in a channel here, and then from 2008 it started picking up again for the bearish side, and then it's going on again in a channel here. So I was just thinking that this, if this is going to be a very good harmonic move on a very longer term here, and if that is so, that is going to touch 110. And if I was just measuring how much time it took from 92 to this low to this high,
Mm-hmm.
if I just did that, and just I draw a very simple, a very simple and a clean view for this, just a simple trend line here, and
Yeah.
I just put a simple channel here, nothing fancy. That, and when I measured this time frame here, so that came out, the convergence was at 110 here. So what
Okay.
I feel is it's going to touch this 110 again, but before that there is a fib extension resistance coming on between 107 to 106. So this might be a stop here before
Okay.
110. But right now, if we look on a shorter time frame right now, so that 101 to 95 is the range right now which is going on, and this, for a resistance just to reach 107 to 6 range, this 101 level has to be broken here. Before that, it's going to retest again the 95 level here again, and that also
Okay.
converging with the lower band of this channel here. So what I feel is going to just touch 95 again first, just for again a push back to the hundreds.
Okay.
So this is all right
That's
in
a very
DXY
nice,
right now.
clean look.
Just trying,
Eh,
just looking at this as how it is, how the harmonic move is on this. So that is the thing, that's the only simple way which I have right now in DXY. And one more thing I was having in Euro USD, I was just having the same thing, a very simple clean one. Just drop down it, just coming to the daily one. So uh, I was bullish here at
Yeah.
this is the
110.
monthly, that was a monthly resistance for me. And as soon
Mm-hmm.
as it just broke here, I was bullish here, and my target first was this support, which is the resistance, which is now its support right now, and the May high, this last month's high here at 1.11435. And right now I'm looking for this level, which is also major resistance at 1.1225 to 1.16640. This range here, right now, I'll be very cautious at it, because I can see either a very sharp retracement back to the support, or a quick breakout till 1.3738 levels again in Euro USD. Mostly I'm looking for a buyer side here, but still this resistance is a very important one, because it's 2018 low also. So converging, all the points are converging at the same level here, the yearly ones and the last year ones, and before that, the before September 2019, every level, every pivot points, and every support resistance are converging between these two, this range here right now. So
Interesting.
that is one which is actually catching my eye right now in Euro USD.
Okay. That lines up with your dollar outlook. A little lower in the dollar, a little higher in euro. And
Yeah.
then look for an inflection point. I have a question. You could go to oil, but someone
Yes, of course.
that showed up for your interview, Katsu Mokashi, showed up here and wanted to know if you could take a look at USD INR before you leave today.
USD INR for sure. I'll just do that for you. I might be having a chart also. Yeah. So USD INR. It's not an updated one, but still I have few levels here just to give you a clear idea about the basic trade which can be possible in this is this level here. I'll just mark it down as the price level, the 75 level here. For this is on a daily chart time frame. This is a resistance for me. From here it has already reacted, and this is the target, or you can say the support line here for me. So from here I'm looking for a bounce right now. And if this 74 is broken, I'll trade for this level. Okay. For a short side. And if it gives me a proper bounce with a good price action here, like a good rejection here at 74.5 level, I'll be going buy again for 75 level. So this is right now in my list in USD INR.
Okay.
Yeah.
Thank you, and hope that helped you, Katsup. Okay, and then you're going to oil. Okay, so
yeah, and my favorite.
God, I've been looking for this rally to end for a while. You have it up there, $43, huh? 40 to 42. Okay.
Yeah, 40 to 42. Here, what a dramatic time that was, and just going on like just boom.
Did you buy it at minus 38?
I did not buy it minus 38. Now I'm regretting why I didn't do that. But
I was just too much in shock to do anything. I go, I've never seen a commodity go negative before, so I was wondering if you bought it.
Actually, that after from minus to when it just opened in the gap up here at around like 20s and all.
Yeah.
I was thinking why I did buy it. That was like such a stupid thing which I've done, and I regret that so much.
That rearview mirror is really, what so much easier.
Yeah, what happened at that time was that we were already on a short side way before it was going. As I also informed you about that, we have we are coming up with an indicator here, just compiling all the studies which we have been going through since so many years. Yes, Bhumi. So Bhumi gave a sell signal here already on Jan 20. So we were on a short. We were short here around in Jan, and just when it fell down, we were only in that dream, like, oh wow, what a move here right now. We already caught this. So I forgot this to buy again, and now I'm regretting why I didn't buy at that price. But we already had a very handsome profit from this.
Oh my God, that was a like catching the crash. Yeah. Same thing.
Exactly.
Okay, so now we have some more upside.
Yes.
Yeah, you see any potential for a pullback before we go into the 40s?
Potential. I'll just do the 4 hours for a clear view. This was a resistance range for me where it actually just stalled again good for a very good time period. Then it gave a breakout here, and my first target was this 36.25. Now from here I can see a retest at 34, but not lower than that, or not lower than 2009 low here. Just put 33 around this level. I'm not looking any lower here, because already I am on a bullish side and on US oil, because on a longer term, again it was an harmonic move on a longer time frame, and this is the move here.
Okay.
I'll just quickly mark it.
I like how you put in important highs and lows going back in time.
It's very easy.
Because most people will forget, the 2009 low and 87 high, and you really look at history. Huh?
Yeah, I always love to see what at that particular price, how that price has reacted in the earlier time. And earlier time means the first day also when it started trading. So that makes a very huge difference, because I just love this price action thing, that at this price it is going to go up, at this price it's going to reject, and when it does, it seems like a very small baby like of magic. Oh wow, it rejected here. It's so interesting now. So
Yeah.
that's the reason whenever the prices, I keep updating it. Whenever the prices is, for example, right now that prices at 35, how at this price at earlier days, how it used to react. Like here again, it gave a when there was a depression here in 2008 here, it
Yeah.
reacted from this price level itself. So that's why this price is very important at this point of time. It is going to be a very strong rejection point also, and it's going to be a quick pickup price also. So that's the
Okay.
reason I keep on just updating for the historical prices, the
Good.
important prices like the support and resistance here.
Okay.
So here, this is kind of a harmonic move, and that move, because of that move, I am looking for on a longer time frame. This one I have got it around in at this point of time. I was just waiting for this 40 around in like May or something, in 5th or 6th of May. So right now I'm all bullish on oil. I'm not looking for any downside, not lower than 33 for sure. And
Okay.
if it is testing this and it's again rejecting my level, then I'll
Yeah.
be adding one more lot in this for sure, for 40s and 42s for sure. And that's again like it's this also conversing as a 2019 low price also at 44. So that's
Yeah.
again becoming a very important point as in terms of historical prices. So this
Okay.
is my target in oil right now.
Okay. So, was there any other instrument you wanted to talk about, or do you want to go to showing where people can find you?
I have SPX also.
Okay.
I was actually tracking SPX. COVID has actually made me so much interested in all the pairs here that I have line up here for everything. So
Okay. All right.
here we are at a rejection point right now in 3055. If you can see, it or not only broke this resistance level for me. It's
Yeah.
testing it right now, and if it is testing now and it's giving a rejection again at this level at 3052.0, then I'm looking for the higher side of 3096 in SPX right now. So that is
Okay.
for me in SPX here.
And
And
what is the basis of that resistance going all the way left? Okay. It's not a yearly high or anything, is it?
it is actually what I do is I mark the prices. If I just
Hmm.
drop down to weeklies and I just go to the
Right.
weeklies and monthlies, I calculate when there is such a long a candle here. There is one
Okay.
thing which I always do is with the long candles always attracts me, because in between that, the midpoint of these candles, there lies a very strong support and rejection lines.
I see.
Okay, so I
Okay.
calculate. I just calculate the variance of this, and then I can take out the mean of it, the average of it, and then just mark it as a important rejection and support line. So this is something which actually is convergence of earlier year. From earlier year, this was a
Right.
range where there was a lot of movement was there in between these range. So this range is right now, as the prices is going down, coming from down to upward side. So that's why
Hmm.
this price is, for me, it's a important resistance level, as this price, at this price for sure, the prices will react for sure. So I just mark down, I calculate those levels, and I mark down is in a range form, because it can not only just touch the upper band, or it can just reject from the lower band. So this entire range in between this boxes which I'm making here, I don't trade in between these boxes. I trade either at
Right.
the breakout downside or upside. So
Right.
that's the reason I just make these resistance and support ranges here.
You are
And one
very,
more.
go ahead.
Yeah,
Gold, huh?
sorry. Yeah,
Okay.
gold is like it's I was tracking it since a very long time, and again I'm going on a monthly time frame here. Gold has caught my eye when it was at on July 19th. And after that, in December here again, it caught my eye because from the first day it started trading, the way it is going on, the prices is making again a harmonic move here from the starting point till its highest point here, then again going back. This everything is harmonic here right now. So if now it has reached it's a make or break point here.
Yeah, I agree.
So at this level here, I have marked already from 1734 to 1752, this range. Now
Yeah.
this range is a make or break range here. Already it started just testing its higher levels of 1752. If it is
Yeah.
going to break it, it's going to touch 1800 again for sure. And if not,
Okay.
it's going to fall very steeply back to 1650s and 1600s. So that is
Okay.
one thing which I was actually following on gold right now.
Okay. Some great looks, Raksha. What's the best way for people to follow you and keep in touch and look at your work and maybe check out Boomi,
Yes, of course.
etc.?
Bhumi, I'll just, you can find me on Twitter. My Twitter handle is @RAKZ_27. And you also you can find me at Nifty Analysis, niftyanalysis.in. This is our website, our official website here. Here, everything related to Bhumi is given, and Bhumi is the market directional indicator which we are doing. It's not a lagging one. We have done a lot of research on this, and just coming with more and more updates about it. And very interesting part is that we are covering all the forex pairs, all the commodities, and now we are coming to US stocks also. We already launched here for the US stocks and indices also, like US 30, SPX, and everything. So we are covering almost every global market here, every market here in this, including commodities, forex pairs, and everything here in Bhumi right now. So here is our website, and you can find me on my Twitter ID. It's RAKZ27.
Great interview. Thank you for edifying faith once again, Raksha.
Thank you so much for inviting me. It's like a second home, as I always say.
Well, remember, don't just count your pips, count your blessings, and having people like you come in and show people your work. Really appreciate your giving spirit. And that's going to be a wrap for us. Thanks again, Raksha.
Thank you,
And
man.
we'll see everyone tomorrow. Don't just count your pips, count your blessings, everyone. Adios. Have a good rest of the day trading. Thanks again, Raksha.
Thank you
And
so much, Dale.
good luck to you, my friend, and stay safe as well.
Stay safe and just take care,
And
Dale.
give the baby a kiss for me.
Thank you so much.
All
For
right.
sure.
See ya.
Bye-bye.
Bye-bye.